Hey everyone, welcome to Cash Out. My name is Kenneth Suna, and this is the weekly TV show where I talk about what happened last week and what might happen next week. However, this is the first show of 2021. So I thought I would switch it up a little bit, and instead of talking about what happened last week, because last week was pretty quiet, and what might happen next week, I thought instead this week we would talk about what happened last year and what might happen in our current year, 2021. And since I do not have a teleprompter, I have this piece of paper with some notes on it. So I'm gonna be doing this probably a lot. Sorry if that annoys you. Or if you're listening to this in like podcast form, sorry, I have my matcha here. If you're listening to this in like podcast form, you know, you're not watching, you're just like listening as background noise, then you don't see me looking at the paper. Anyway. 2021 is going to be a little bit different than 2020. 2020 was pretty volatile. In fact, the last kind of 4 years, this might be a little bit political, but only because, you know, sometimes people on TikTok will say like, stick to the stock stuff. We don't want to hear your politics. Well, you know, unfortunately, part of investing and trading in stocks is paying attention to what's going on politically in our country, because they are intertwined in a lot of ways. Political policy affects the market. Political decisions affect the market. What the president says on Twitter affects the market. And so whether you want to talk about it or not, they are connected in a lot of ways. For example, this whole stimulus thing, right? It's you look at what's going on in other countries and how they're getting stimulus left and right. In some places up to 70% of their lost wages since the pandemic started. And yet over here in the States, we're arguing over $600, but well, I don't know if they deserve $600, or what about $2,000? And it's just a mess. That affects the stock market, right? Because if we had been getting, say, $2,000 a month since the pandemic started, like a lot of countries, or at least the people who are in desperate need of that money, yes, they would have been covering their rent if they were laid off, but they would have also been shopping and stimulating the economy, and that would have been good for the markets. If people get foreclosed, that could be devastating for the markets. It could also be great for the housing stocks, but that's a shitty way to, you know. Anyway, I wanted to talk about my own personal experience, and then I wanted to talk about how you have to adapt as a trader. 2020 for me was mostly day trading, which I don't do. If you follow my channel, if you know me by now, you know that I am a swing trader. I've been swing trading for the most part over the last 10 years that I've been trading. The majority of my time has been spent on swing trades. That is short-term trades, anywhere from overnight to several weeks to several months in some cases. As the markets became increasingly volatile over the last few years, I had to switch up my strategy because I didn't personally feel comfortable tying up some of my funds in stocks that were swinging up and dropping and up and down like that. I wanted to get out. I wanted to lock in my gains if I had them before they reversed course, right? If I was up $400 on a stock, or if I was up 15% on something, you know, the very next day the markets could plummet and crash, and I'd be down. You know, I'd be down to $100 in profits, and I'd be kicking myself. And then the next day it would be, you know, I'd be at break even, and the next day I'd have a small loss. So the way I kind of approached it was, if I have a gain, I'm taking it. And that resulted in a lot more day trading for me. One of the things I talk about a lot is that you have to have multiple strategies as an investor. You gotta have multiple strategies, because one year is gonna be a bull market, just everything is going up, and then you can swing trade. You know, it's funny, I see a lot of people on TikTok going, Joe Biden's gonna come in and the markets are gonna, and everything's gonna change, and day traders are gonna stop. Day traders aren't gonna stop existing, right? Day traders will always find a way to make it work. If we have a bull market, day traders will still thrive, but swing traders might do better, because in a bull market, everything is pretty consistently going up. Day traders might be getting out of positions too early. Maybe they don't care because they're day traders and that's what they do. For me, I'll probably switch back to more consistent swing trading as the markets are on a steady, as I imagine that they will be, steady upturn. We're going to be spending a lot on infrastructure. We're going to be spending a lot on what have I got here? I got all my notes. Cybersecurity, electric stuff, climate change related things, cannabis. There's a lot of stuff that might be happening over the next year to 4 years, which could be very good for the markets. And so we've got a lot of stuff. So what I wanted to do, what I thought would be fun, and now this is where the notes come in, is to take my list here, which is the biggest stocks of 2020. This is just a small list. Obviously, I'm sure people in the comments will say like, well, why did you leave this one out? Or why did you leave that one out? But I want to do this. I want to go over the stocks of 2020, some of the best, biggest runs of the year, to make a point, which is just because something happened last year doesn't mean the same thing will happen this year. I know a lot of traders like to look at the markets and say, oh, it's a pattern, or oh, because it did this that year, it can possibly do it again this year, or oh man, I really missed out on this stock. I wish I had bought this stock, but I didn't buy it last year, and I see that it went up 270%. I'll buy it this year, and it'll go up another 270% because I want it to. That's not necessarily how the markets work, right? So here's the little list here that we have. Twilio, which is cloud stuff, data, went up 270% on the year. Etsy, one of the funniest memes that I saw in the last couple of weeks was Pfizer is trying to save the world and their stock is up 12%. Etsy will mail you an anklet and their stock is up 273%. Funny, but true. And also, Etsy is where all my masks come from. I get all my masks off of Etsy. So even Mr. Minimalist here is using a site like Etsy. And that's how you know when you found a good thing to potentially invest in. Now look, these stocks have all had massive runs. Does it mean that they're going to drop, right? Does it mean, oh, the rally's over, it's up 270%, now it's going to go down 270%? Will it just stagnate for the year and just kind of level off? Will it correct a little? That's the thing. Nobody really has an answer. Nobody really knows this stock will certainly go down or it'll go up or it'll level off. With some, you can take maybe like an educated guess on some things, right? Like some of the work from home stuff, like Zoom. Zoom was up 398% on the year. That's incredible. That's 400%. You know, it's funny. I hear a lot of people talk about dividend, but do they pay a dividend? Well, you know, if the stock pays 4% in a dividend but doesn't really move much over the course of the year, right? Like an AT&T or Verizon that kind of just stays within a pretty tight range, which would you rather have? Almost no gains and 4% guaranteed, or 398% on Zoom? Now, just because Zoom went up 398% doesn't mean that it will in 2021. It might not. It might actually drop a little bit if a vaccine comes out that's successful, that people actually take, that people keep wearing masks, and we can bring the rate of infection down. Before you know it, maybe some people are going back to the office. If people are going back to the office, stocks like Zoom might take a little bit of a hit. Maybe even stocks like Twilio with the data and the cloud computing, although probably not because people will still use it in their office. Let's see what else we've got here. NVIDIA is up 120% on the year. I think AMD was also up around 98% on the year. Square and PayPal, both online e-payment kind of stuff. Square was up 249%. That's huge. PayPal up 99%. And I'm saving the last two, Bitcoin, which isn't a stock, and I'm basing it off of $30,000 per coin. It's funny because I also hear, I know I say it's funny a lot, but I hear a lot of people say on TikTok, I want a couple of shares of Bitcoin. You're not buying shares, you're buying coins. Bitcoin, I'm basing it off of 30,000 per coin. I know as of filming this video, it's closer to around 33,000, but Bitcoin is so wild, it might be 30,000 again in a couple of minutes. Bitcoin is up 331% on the year. At January 1st of 2020, so a full year ago, Bitcoin was $6,900 per coin. $6,900 per coin. You might have been able to afford, you know, one or at least half of a coin. And now it's around 33,000. So imagine if you had just bought one coin at around $7,000, you'd be sitting on a pretty hefty, you could buy yourself that new Ford Bronco when it comes out off of your coin. Which is, I've seen license plates in DC. I live in DC. I've seen license plates on very nice cars that say TY BTC. Thank you, Bitcoin. Not me. unfortunately. And last but not least, the biggest winner of 2020 was Tesla, on my list at least, up 695%. That's amazing. That's amazing. It's almost 700% in a year. And so the lead into the follow-up to this video is, just because it's done it once doesn't mean it will do it again, right? Tesla might go up another 700% this year, but if you are investing in Tesla because you are hoping that it will, that's not a strategy. That's not a plan. That'll actually potentially get you hurt. If you are so tunnel vision focused, hyper focused on this price or the percentage gain that you need because you want to be rich so badly, and you're seeing all these other people like with the thank you Bitcoin license plates, and you're going, I want that to be me, then you are already losing, because you already are thinking, you're not thinking. You have no strategy, you have no plan, you have no goal, you have no entrance, you have no exit strategy, you have no plan if it starts to drop. You're just wishful thinking. And that kind of wishful thinking, fingers crossed, I'm praying that it goes up. That's not a strategy. That doesn't work. That will most likely get you hurt, because you will get in at the peak and then you won't get out in time to prevent sitting on a massive loss. So if you are getting into one of these stocks, hoping and praying that it's going to be another 270% this year, it might. But what is your plan if it starts to drop? At what point do you cut your losses or lock in your profits if it starts to go down? You can always buy back in, right? Let's say you buy in on a stock that's $400 a share and it goes up to $500 a share. You can sell. There's nothing wrong with selling and then buying back at a slightly higher price if you regret it. You know, I think a lot of people go, oh, I got out and now I can't get back in because it went up a little bit. Sure you can. You can always get back in. It's called momentum investing or momentum trading. Buy low, sell high is what you've most likely been listening to your whole life. But there's also something called buy high, sell higher. You can always buy it at 400, sell it at 500, and then buy it back at 475 if the support lines on the chart are holding up, or if all the indicators, the technical analysis that you use are indicating that the stock has leveled off at 475 and might be going higher. Buy back in at 475. There's nothing that says that you can't. Yeah, you might be able to afford fewer shares, but you're still in it. You can still do it. The next thing I wanted to talk about was, just because one company in one sector has done it doesn't mean that everything else will do exactly the same thing. And that's something that I've been seeing a lot on TikTok lately, as stuff like with Bitcoin and Dogecoin. People have said, oh, well, 10 years ago, Bitcoin was the same price that Dogecoin is today. And if Bitcoin could go to 30,000, then Dogecoin could too. And it's just wishful thinking. And again, that's not a strategy. Wishful thinking isn't a strategy. Just because Tesla went up 695% doesn't mean that NEO will or Fisker will. They might go up 15% or 34%. At what point do you say, I'm happy with this gain? Because if you are holding out for bigger and bigger and bigger profits, you're being greedy. And Jim Cramer used to say, bulls make money, bears make money, and pigs get slaughtered. All I'm saying is don't be greedy. Let's say you buy 100 shares of something, or $1,000 in Dogecoin, or 1,000 Doge coins, and it has some monumental run up. You can always sell half. You don't have to sell the entire position, right? If you have 3 shares of Tesla, you can sell 1. If you have 2 shares of Amazon, you can sell 1. You're able to hold some. If you want to roll the dice, you are more than welcome to take that chance. But don't YOLO more than you're willing to lose, because you probably will. So if you buy some Dogecoin, if you buy some NEO and it has a nice big run, you can take some profits and hold the rest. It's called playing with the house's money. Take what you put in and let the rest ride. So I think it's important to say that just because Tesla or something had a massive run, not all the electric vehicles will do the exact same thing. That's just a caution. They might not. Your next option, of course, when you're playing like this, is to put a little bit of money in everything, like almost kind of like create your own ETF. If you think electric vehicles are the future, or you think cannabis is the future, you have one option, which is to put all your eggs foolishly in one basket and go, this is the one that I've picked and I want it to go up because I want it to. Or you can say, this is the one that I've picked and I believe in the most based on fundamentals, based on technical analysis, based on my personal feelings about the company. Maybe I use that company. Maybe I like that company. I'm going to put the majority of my money in this one, and then I'm going to divide up the rest in a couple others, right? So you could say I'm going to put 30% of my money in this one stock, and then I'm going to divide up the other 70% amongst these other competitors, just in case, because you never know. The one you believe in the most might fizzle and go nowhere, and then there might be some surprise stock that pops up out of nowhere and takes over. You want to be in all of them. You don't want to be all eggs in one basket, because when there's a sleeper company down here that pops up and goes, we have something amazing, everyone's going to dump their shares in this one and go running to this one, and it's going to go higher. So diversity is key. You can absolutely create your own ETF just buying a little bit of all the ones in one sector. There's no reason that you can't. And you can do that obviously with anything. You can do that with tech. You can do that with cloud, cannabis. Do it with anything. So now I want to shift over into 2021 and what I expect to happen. First of all, like I said at the beginning, I think we're going to have a pretty consistently up market. There might be pullbacks along the way when tax plans maybe for the super wealthy get introduced. Will they pass? You know, if they pass, maybe the markets pull back a little bit for profit taking. If they don't pass, maybe the markets will continue to go up. But I think generally speaking, we've got a lot on our plate here. We've got climate issues. That's going to create tons of new jobs. You think about solar, you think about electric vehicles, charging stations, all of these things that, green energy stuff will create lots of jobs. That's good. And that's only in the green environmental capacity. Now, what about infrastructure? Our roads are terrible. Our bridges are crumbling. Our schools are covered in mold, like I talked about in last week's show. Think about all the jobs that's going to create, right? People are going to have to be going in, fixing the roads, fixing the schools, rebuilding the crumbling buildings, taking care of the mold, putting solar panels on the roofs of government buildings, maybe of schools. That would be incredible. That's going to have a big impact on things. Let's think about cybersecurity as there are more attacks or more hacks or more stuff happening with cybersecurity. The more we get into tech, the more we are opening ourselves up to hacks, from Russia or even from here. Companies get hacked all the time. I get emails all the time from Target or Visa saying our stuff has been hacked. So the cybersecurity stuff like crowdsource, for example, and other companies in that sector might do very well. Let's see what else we've got. Cannabis. Cannabis might do very well if Joe Biden legalizes it or at least cracks down on something. I don't know. Cannabis could do very, very well. And like I said, you don't know which one's going to be the winner. You can throw down like I personally have. I've thrown down in a bunch of different ones. Some of them are penny stocks. Some of them are kind of established. And you just never know. Let's see what else is on my list. Oh, I said infrastructure, but I didn't talk about it. Stocks like Caterpillar might benefit, if we're building stuff, if we're tearing up roads, if we're doing stuff. Caterpillar, they make all of the equipment. Nucor is a steel company. Nucor might benefit. Electric stuff for the vehicles. Not only Tesla, not only potentially like a Neo or something like that, but Plug, Blink, those are electric charging stations. I almost guarantee that if we start going this route with pushing heavily on electric vehicles over the next couple of years, gas stations, right? Gas stations will have to make the transition. They'll have to change some of their stations from gas to electric. They'll have to. And I know it's going to take a little bit longer to charge a car. I don't know how long it takes. Is it a half hour? Is it 10 minutes? As the technology improves, people are going to be swooping into a gas station to charge up their car the same way that we would fill up our car with a tank of. My video got interrupted because I was doing my laundry, so my timer went off. But I'm still here. Laundry can wait. Stuff like Plug, Blink. Maybe one of these gas stations will acquire them. Maybe they will get into business on their own. You know, a lot of big stuff could happen. You know, we saw some pretty big mergers in 2021 or in 2020. We could see some big mergers in 2021. You know, I wouldn't be surprised if Exxon tried to buy Blink or Plug or one of these things. Let's see what else we've got here. I think I mentioned cloud, stuff like Twilio. Had a huge boom last year, 270% increase. Could still have room to grow because it's a hot sector. Everyone's talking about cloud. We're going to use it. We need it. Let's see what else is on the list. Healthcare. Healthcare is a big one. I'm talking about vaccine stuff like CRISPR Therapeutics, which is in doing gene editing to cure diseases like sickle cell. CRISPR could have a promising 2021. These are all maybes. PayPal could continue to do well. Stuff like Square could continue to do well. And then we've got the work from home sector, which might take a hit. Might. We don't know. Here's the thing that I think is so interesting about this whole work from home thing. Companies are realizing, oh, you can still work from home and get your job done. If you can work from home, maybe this humongous office that we've leased, maybe we can downsize our office from 1,000 employees to, say, 200 employees. Just the real necessity. That's going to save us money, and you're still able to do, like, the whole notion was you won't be able to do your job if you work from home. You have to be at the office. And I think one of the benefits of COVID is that we've been able to kind of see that, like, oh, wait, people can actually still get their job done and work from home. That's going to save companies money, right? It's going to save on overhead, on electric, on bills. It's going to save on their rental space, right? If they're able to downsize to smaller offices, it's going to save them money. It's going to hurt commercial real estate potentially, or at least commercial office space. You know, every time we say, oh, there's a vaccine and it's safe and it's good and it's effective, these work from home stocks drop because we all think, oh, everyone's going to come running back to the office. Some people might not. I have a lot of friends who live in San Francisco who work in tech, and they've told me that all of their offices are saying, just work from home forever. So, you know, this might be the new trend. We might see this. So every time there's a vaccine or talk about COVID's going to be over and these work from home stuff like Zoom or work come down, it might be an opportunity to buy. Might. The last thing I wanted to talk about, since I'm running out of time here, is the gambles, right? The risky stuff. Stuff like airlines, hotels, travel, casinos, live events, which is also like a DraftKings, right? There's sports betting, I think. I don't really watch sports, so I don't know. These are all gamble stocks. Cruise lines, too. Do you want to take a chance on them? Do you want to start buying now because you anticipate COVID is gonna kind of maybe end? Maybe they're gonna open up the borders. Maybe we're gonna be able to travel. Maybe we're gonna be able to get on a plane again and go overseas to countries that have said you can't come in if you're from the U.S. It's a risk because we're looking on the news right now. There's this COVID variant, so we've got countries overseas in Europe who are shutting down again, who are saying no outsiders are allowed in. What's gonna happen? We don't know. So it's a risk. I think still it's a risk to get into these airlines, the hotels, the travel, the cruise lines. I would still say maybe not, but you know, they've also maybe priced in the slowdown. You know, people are maybe anticipating that this is going to end, so they're getting in now, and nobody's really selling off because we're looking past COVID. It's hard to say because nobody knows what's going to happen. Nobody knows what's going to change in the next couple of months or in the next whatever. So if my caution to you is if you're thinking about getting into these riskier stocks like casinos, hotels, airlines, cruise lines, live event stuff, my brain's not working. Scale in just a little bit at a time. right? If you want 100 shares in a cruise line and that's what you've budgeted for, you can afford 100 shares of that cruise line, start buying slowly, right? Because there's going to be news that continues to come out over the next couple of months that are going to impact these stocks. You can buy 25 shares at a time, or 10 shares, or 5, or 1. You can buy whatever you want. Start buying in slowly. And one tip or suggestion is to buy more as it's going lower. So averaging down at a lower price with more shares might work in your favor. So you buy 10 shares now, drops a little, you buy 12 shares, drops a little more, you buy 15 shares. And always pay attention to the news, right? There might be some catastrophic event. You don't want to just be averaging down every single time without checking, without reading the news, without seeing what's going on. Maybe that stock is dropping significantly because they're declaring bankruptcy, like an AMC, for example, that is having lots of issues here. So just because a stock that you like is going down and you think you know the reason, doesn't mean you should be loading up on it. You gotta pay attention. You gotta read the news. You gotta see what's driving the stock down before you throw in your money. Remember, right? This is your money we're talking about here. You have to be careful with it because you could get crushed, especially if you don't have a plan, right? That's why I always say you gotta have a plan and stick to the plan. Gotta have a plan with this stuff. If you're just averaging down because it's going down, 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 you potentially are throwing good money away on something that might not recover. Maybe there's a reason the stock is going down so much that the news hasn't come out yet. But when that news comes out, you're going to be like, oh, that's why it's down 35%. So not every downturn is an excuse to just go and throw more money at it. You got to do your homework on these stocks. You got to see what's going on. Why is it crashing? Pay attention to the news. So I think we've covered it. There's a lot to look forward to in 2021. I think it'll be a good next couple years for the market. I don't really anticipate, a humongous recession, although we might have big corrections. That's another thing I talked about on TikTok the other day. I think as the markets become more and more volatile, we're going to see more pullbacks and more corrections and fewer recessions, just because I think it's the nature of the markets now. I think that's going to be the new normal. I think we're going to see huge run-ups, and then all of the big-time hedge fund, billionaire, millionaire, super wealthy investors are going to take profits. Things are going to crash. That's when the retail investors, all the new people on TikTok and Robinhood, they're going to freak out. They're going to sell. Then the billionaires and millionaires are going to come back in. They're going to buy. Everything's going to go up. That's what I think we're in for over the next decade, maybe longer. Not to say there won't be recessions. There could be. Oh, and the last thing I want to talk about is the importance of having investments in a time like this, right? If you look at what's going on, the economy is in shambles. People are being evicted. They're talking about massive spikes in homelessness. This is not good. The people are getting laid off. They're on unemployment. People can't pay their bills. They're waiting in line to get food. This is a really bad situation in our country. But hey, the stock market's doing great. And so it shows the humongous disconnect, right? The stock market is not the economy. I think everyone knows that by now. When you hear people like the president say, economy's doing great because the stock market's at all-time highs, then why are so many people on the streets? Why are so many people waiting in food banks? This is the importance of investing. This is the absolute importance of investing, right? You start 5-10 years ago, adding a little bit every time. You live below your means. You have less stuff. I know that's hard, but when I put on the news, sometimes I see, this is Bethany, and she's a single mother of 7, and she's having struggles paying the bills. Well, why does she have 7 kids? This is what we do to ourselves. We think, hey, things are good. I'm just going to go fucking crazy. And look where it gets us. We have too much. We have too many kids. We have too many things. We have too big of a house. We have too many toys, too many clothes, too many shoes, too much stuff. You're feeding too many mouths. We need to have less stuff. Even not talking about kids. Pocketbooks, clothes, shoes, watches, gadgets, tech, stuff. We need less stuff. When we have less stuff, we can invest more. And that way, when things get rough like they are right now, instead of having to wait in line at a food bank, instead of saying to your landlord, I can't pay rent again this month, I'm behind again, I'm behind again, I'm behind again, and looking to the government going, you got to do something to help me, you've got your investments. And that is why you have them. Look, ideally you hold these investments for the long term, right? But in a dire situation, dump your stock. Sell some of your shares. You know, if you've been investing steadily over the last 5 or 10 years, you don't have one share of Apple. You've maybe got 10 or 30 or 100. You've probably got a sizable investment at this point in various different companies. And you can, ring the register on some of them. Hey, I'm going to sell 10 shares of Apple. I'm going to sell 5 shares of this. I'm going to sell 1 share of Amazon. I'm going to sell 1 share because you bought these stocks years ago. That's the importance of buy and hold investing. Is you're looking at Amazon today going, it's $3,600 a share or whatever. I can't afford 1 share of that. Yeah, but 8 years ago, you might have been able to when it was considerably less. You might have been able to buy 1 share of Amazon when it was $500 many years ago. Now you're up $3,000 profit. You could sell that and cover a month or 2 of rent, or maybe more depending on where you live. That's the importance of investments. That's why you want to have investments. Yes, they're great for the long term. You want to hold them until you retire, but in a pinch, when you're sitting there going, we can't afford food, man, you will be so glad that you have your investments. So that is the first show of 2021. Cash out. It's a wrap. Thanks for watching, and have a great new year. I know last year was rough for a lot of people. I hope this year will be a little bit better. Follow me on TikTok, subscribe, hit the bell, do all the things, and have a good day.